And good afternoon. Welcome into Market Talk for Thursday, March 25th, 2021. A good afternoon to you. Hopefully, you're having a great day and a great week here and getting close to wrap it up here with the weekend. We got Friday ahead. It's always a pleasure to be on the air with you here with Market Talk. I'm your host, Jesse Allen, and a good afternoon once again. Find us online, markettalkag.com. That's our home on the web. You can find the links to all of our streaming sources, including Spotify, Apple Podcasts, iHeartRadio, Google Podcasts, and more. You can also find our radio affiliates there, all of our social media. It's all online, markettalkag.com. Well, it was a rough day in the grain market, but a very good day in livestock. Let's talk about all of it. Let's bring in our friend John Heinberg with Total Farm Marketing. John, good afternoon to you. And definitely, it's hard to believe we're nearing the end of the month of March. We've been getting some rain here in Nashville today. I don't know about you guys up that way.
Yeah, we're a little bit on the cool and cloudy side today. We just had the storm kind of go through here yesterday and the day before. So we did pick up some really good moisture in that side. But now, like I said, a little chilly today and even talking maybe a flake or two of snow one more time tonight. So we'll have to see. Obviously, the March snows are usually gone by noon the next day if we get anything of substance whatsoever. So
yeah, very, very true. Very, very true. Well, that moisture definitely needed, though, throughout parts of the Corn Belt. And we'll talk about that and grains in a minute. I want to lead with livestock today. Hogs and Pigs report out this afternoon. That hog market was looking pretty strong at the close today, continuing that bullish momentum. And I know that Hogs and Pigs report, we were waiting on that. It's kind of the next hurdle to jump. What did you see in that report out this afternoon?
Well, realistically, we got a report that maybe already being reflected in the market as you look at the total hogs numbers being lower than expected in that regard. So that's been what we've been watching in the trend has just been the slaughter numbers are down on a weekly basis. We're down about 5% slaughter right now, year over year. And that's definitely showing up in the cash market as well as, we add in strong demand that's been in front of us. And this market's just still looking for a top. But again, watching total hog numbers again below expectations. The biggest thing I was looking at too was going to be where are we at in the farrowing intentions, and there we're looking at a couple percent for the next quarter, and then 4% down for the summer months. That might be a little bit of reflection of where these grain prices are starting to come in, and we're not looking at a hog herd that's expanding by any stretch of the imagination. So we'll see how much fireworks come out of this report tomorrow. You got a market that's already pushing, with April through July contracts locking in new contract highs on the close today. Cash market trading at its highest level since 2014. You got carcasses at over $110 a carcass. Just feels like there is some more room for this market to move in this time frame, and the money seems to be pouring in and pushing it at this window.
Definitely going to be an interesting day on Friday. I think we should get ready for some fireworks just with the way this is all setting up. And on top of that, pork net sales on the weekly export sales report were down 3%, but we're still fairly decent. And China really stepped into that pork market along with Mexico on the weekly report.
Yeah, when you get sales and shipments at 38,000 metric tons per, on both sides on a weekly basis, yeah, we're down 3%, but 3% from what? That's a pretty big number last week. And just, again, signs of how this product is moving and the demand that's in the market. Then we still got to deal with the domestic demand that does have some good possibilities behind it. And here's a hog market that's looking for pigs at this time frame. The packers are making money, so they're willing to pay up on the cash market, and everything's just kind of coming together into a bit of a perfect storm. And now you're going to be looking at April hogs poking at the $100 barrier. Wouldn't be shocked we take that out tomorrow. Right now on some of these charts, there's not a whole lot of things over top except for maybe back to those 2014 highs. I will see if we got enough momentum to get there. That's going to be very, very pricey, and then in this window, just like we see in the grains and things are over elevated, things can move very quickly. So producers need to make sure they're at least staying on top of things in here.
Definitely stay on top of it and get a little help if you need some advice on what you should do with your marketing here with this hog climate. On the cattle side, a strong day in the cattle market as well. And, feedlot trade, John, we finally got at least a buck higher in feedlot trade this week. Maybe that's a sign of things to come. One could hope, I would suspect. But what are your thoughts on the cattle market after today?
Yeah, that was a nice turn, at least to get some strength. It started showing up a little bit towards the end of the week last week. We heard some, just talk that Packers are being a little bit more aggressive, just trying to get some cattle locked in for early in the week. And so we saw a little bit bump in the trade in the north here last week on Thursday and Friday. That followed suit this week. Again, we're seeing choice carcasses rallying. They're over $130 again on the choice carcass, or excuse me, $230 on the choice carcass. That shows me that there's some solid demand there. Weekly export sales weren't great, but they're still moving product even at higher levels. So that again shows that demand prospects that are out there. And then again, we're still watching the U.S. consumer, and things continue to stay fairly strong. I know we're seeing some of the COVID things in terms of the restrictions are lifting and more confidence may be happening. We got a Texas Roadhouse right up the road for me, and even with the limited seating, there weren't many parking spots open over the weekend at that facility. So that just tells me that beef demand is good. And we're also seeing some of the numbers come down. We're finally maybe working through some of these heavier weight cattle. Might take us a couple more weeks. We still got some premium over the cash price, which makes me a little cautious here in April and June contracts. But, this was the first week we saw the Packers kind of step up and meet those asking prices versus just kind of slow roll it until somebody gave in. So I'm just going to say it quietly, but maybe the leverage is changing a little bit here in terms of the cattle numbers being tighter and the production being down. And these Packers are stepping forward a little bit more to try to procure some more supplies.
And it would seem that if that's the case, then if I'm a producer, if I'm not getting some hedges in place or something of that nature, or whatnot, and getting some protection built in here, that would almost seem to be the move. Would you agree, John, or would you have a better option for them?
Well, if you sit here and look at both those two markets, hogs and cattle, if we got some potential upside in front of us, I'm a little leery, especially in the hog market, of coming in with something that's going to put a fixed ceiling on top. Just kind of keep building some put strategies underneath. I know they're going to be way out of the money, but at least you got that safety valve in and still locking in a pretty good floor with a market that has good potential. Cattle market, we obviously have that big reversal from last week that really kind of killed our roll. We'll see what happens if we can get back up there and take that level out over the next few days or next week even too. That opens up the door for it to move itself a little bit higher. So I'd be cautious with some limiting positions, or if you use hedges, make sure there's some option plays over top to keep your market open to the upside. Again, I like those put strategies. You can kind of pick a pretty good floor. You're going to pay up a little bit for it, but you got the premium in the futures market in order to help you in that regard, and let the cattle be long on the hoof if the market wants to work itself higher.
John, let's switch our topic. Let's go to grains. Grain market was ugly today, with the exception of soybean meal. Just seemed like a lot of liquidation, a lot of position squaring, profit taking was on the board to me. With a few outside factors, I think, weighing in again. What did you see in this grain market today? Was it just a lot of position squaring here as we get towards the end of the week?
That's very much, and we've really seen the volume come down the last couple of days, and that may be some of the speculator money, not so much moving to the sidelines, but just not being involved. They want to be in markets that are moving, and lately the grain markets have really quieted down. Really we haven't moved a whole lot since January, so we're maybe seeing some of that activity start to slide away. We'll have to also kind of keep an eye on what's going on with some of these outside markets. I didn't like the way crude oil traded today. Stock market did kind of rebound after a fairly rough start, but that crude oil market is looking pretty scary in this window, so that may also come into play here overall. Then let's get into the individual grains. So we start with the wheat market. 630 on the May contract in Chicago was a very key level of support. We bounced off it a couple of days ago, felt like we were going to turn this thing around, and here we are today busting through down a dozen cents. Taking out that level of support, probably on its way to the $6 window. That doesn't make it, makes it very difficult, for corn to get any traction in that regard. We saw the export sales numbers today. They were strong for corn. Obviously, we knew that was coming. The shipments were still strong for corn. We do got a little bit of a natural floor underneath that front month contract as, May corn got basically tied up even with the index today. So, I don't think we're having too many situations where the cash market's going to be over futures. Mm-hmm. So that 540 area is going to kind of at least hold us. So, and then, like you said, it just feels like a little bit of profit taking. Obviously, we got some big reports next week on Tuesday with the acreage intentions as well as the grain stocks. Right now the feeling in the market is those corn acres are going to be maybe a little bit heavier than we want. And with the supplies where they are, it might be enough to get us to go, a little bit more sideways to lower if those numbers come through next week, especially with the forecast and guys getting rolling here pretty soon.
Yeah, and turning our attention to those reports next week. I mean, I've seen projections all over the board. Everything's within a general window, but there's some analysts and traders forecasting corn to have higher acres than what we expect. There's some that are forecasting to have a bit lower than what we expect. Really, it's kind of everyone's throwing a dart at the board, and they're hitting in different spots right now, it seems to me. What does happen if we get a higher corn planting intentions number next week, and we get a lower soybean planting intentions number, considering how tight our stocks are, especially on the soybean side, John?
Yeah, that's really the number. I'm going to probably focus on the acre side more. Right now we are hearing that corn acre number 93, 94 is probably going to be where the analyst expectations are. That'll be a little bit up from the USDA and the outlook for them. And that's some of the reason we've seen December corn just kind of grind here, just at expectations that we get a decent number of acres, we get off to a good start. We still got to make sure we ship all this corn that we've sold. If that's the case, the corn supply could be adequate, not overburdensome by any stretch of the imagination, not under tight, but at least adequate enough that prices can stay felt relatively stable. You go look at that soybean market, though. Again, we already think the supply picture is a lot tighter than the USDA is putting out there at 120 million bushels. We're seeing that already in the cash market, and what we're hearing from some of those end users in terms of providing soybean meal or even oil products. So if that number is under 90 and we print an 88 number on that report, that is not going to be enough to get that carryout even fixed up for next year. And that could bring some quick volatility in that soybean market. And then really the number that's going to be probably the most important one to watch, the acre numbers fun for the media and the news and everybody kind of paying attention to it. It's going to be the grain stocks, the physical count of the bushels, where we supposedly are at this time frame. And if we come in and print those numbers lighter than expected, the acre numbers will be basically a sideline in terms of where prices could go. So this market's looking for some news to move one way or another in direction. Tuesday's report is going to be one of the more volatile reports than typically are during the course of the year, so we'll have to kind of keep an eye on that and see how it plays out.
Yeah, it's going to be a very volatile report. And if I'm a producer, we've seen plenty of sales, and you mentioned that things have kind of slowed down here. I think with farmers selling, we've heard a lot of that lately. But if I'm a producer looking to maybe make some sales before this report or get a plan in place before this report, looking at corn, soybeans, and wheat specifically, would you have any advice for them ahead of a volatile report like this?
Well, it comes down again managing your risk. Again, we're at lofty levels. Prices can move very, very quickly. I've been talking to some producers. Maybe we move a little bit more old crop corn in here. Again, kind of keep some of those out of the money, long range calls in place just to kind of keep our market side open. If guys want to hold bushels through the report, look at the short term puts. You don't have to put a lot of cost into them. They'll protect you against a washout, but at least something to get you through the next few weeks, like a May option in that regard. Or like I said, if you want to sell cash in here, come back and use a call in May and just kind of own things through the report and see how things play out from there. So that's something we'll be really talking about really next week overall. Now, I've been picking up more puts on December corn, just trying to get a little bit more coverage, 460, 470s, pretty good price levels, that we can't, fall asleep on. And if all of a sudden we see carryover go back into the 1.7 window, we're priced too high. So start looking at some of those things to protect yourself if you don't want to go ahead and make those cash sales, because again, we're lofty in price, and we can see things move very quickly if all of a sudden those numbers for some reason just don't line up at all.
Yeah, and it just seems like there could be some surprises in this report. As we kind of wrap up here, I've heard some rumors that, we count those physical bushels. What do we make of that corn that was downed in Iowa by the derecho last year? I know, USDA doing their surveys. How do you survey some of those acres? I think there could be some surprises in this report. I just don't know which way it would be, John.
And that's always the wild card in this. Usually you thought the grain stocks reports were fairly supportive, or we could calculate, get a clear picture, but we found out the USDA has gone back through the last handful of grain stocks reports and made big adjustments on prior reports. And so even if the number comes out, what does the market do with it? Is it believable? That still comes into play. So we'll have to see. And I don't want to sound like I don't have confidence in the USDA, but realistically, at the way things have been over the last handful of months, you get things shaken a little bit when they come back and readjust from this month and readjust from that report, or we missed this item, and you don't really get a good, clear definition of why those things occurred. So, we'll have to see how the market goes. Again, trying to guess what the report's going to do is basically an impossible way to try to market grain. You need to look at the value that you have there, find a way to protect yourself for the what if scenarios, and just realistically hope that you're wrong on your protection and the prices go higher and you got the bushels to go into it. Again, I'll get asked 100 times between now and Tuesday, what's the report going to say? What's the report going to do? I don't know. And you know as well as I do, we have an idea, and the report will trade according to what our idea is and what the market, what the numbers are put out there. If they're in line, we probably don't do a whole lot. If they're off one way or another, it could be a friendly report but still be off, and the market will respond accordingly. So again, don't try to guess out the report. Just look at the risks and go from there.
A lot of things to consider going into that report next week here, and we'll be watching trade closely the next couple of days just to see what we do, kind of setting ourselves up into that report as well. John, I appreciate the time as always today. I know if producers want to reach out to you and the folks there at Total Farm Marketing, get a little bit of advice, they could do that very easily, can't they?
Yeah, I love chatting with them anytime. Give me a call at 800-334-9779. Or again, go shoot me an email at johnh@totalfarmmarketing.com. Don't forget to check out our website, totalfarmmarketing.com. We got a webinar coming up here through our sales team. That'll get put together right after the grain stocks report. I know we're signing people up for that right now. So if you want to look for some information about the numbers next week, maybe get yourself on that webinar. And if you want to come talk with any of us, feel free to reach out through an email.
John, appreciate the time as always. Have a great rest of your week and have a good weekend.
Thanks, Jesse. Appreciate your time, and everybody have a great week.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Thursday, March 25th edition of the show. I'm Jesse Allen, wishing you a great afternoon.